This is Kitco Mining's special coverage of the Future Minerals Forum.
Hello, welcome back to Kitco Mining at the Future Minerals Forum in Riyadh in Saudi Arabia. Joining me today is Randy Smallwood, President and CEO of Wheaton Precious Metals. Randy, welcome back to Kitco.
Always a pleasure to be here, thank you.
Now, we are here at the Future Minerals Forum, or FMF. What is the vibe here for you? What has been of most interest to you here so far?
Well, I said always a pleasure to be back, and I realized, hold on a minute, this is my first time here, and so it's an interesting event. Definitely a very broad cross-section of the resource industry, not just the gold industry, the entire resource industry all across the board. And so there's some pretty good energy here. Lots of interest, lots of appetite in terms of learning more about what's going on in Saudi Arabia, of course, but I would say even in the broader Middle East and Africa, we're seeing a lot of discussions that was.
It does seem to be a very, very impressive event, the quantity of people here and the level and range and diversity of people here. Is perhaps a reflection of the changing balance and power of how the sector is organized, how the sector is financed, how the sector basically operates?
Well, there's no doubt. The capital capacity here in the Middle East, there's a strong desire to support the responsible resource extraction, the mining industry. And so, there's a healthy appetite. The Kingdom of Saudi Arabia has come out and stated that they want mining to be a third pillar of their economy here. And so it's refreshing to actually hear that from any jurisdiction around the world in terms of support for responsible resource extraction. And so there's no doubt that has a certain amount of appeal, and it's probably brought a lot of the people here. What we produce as an industry is required by this planet, and it's nice every once in a while to have a government that's supportive of trying to push that mandate forward.
Definitely. Now, for Wheaton Precious Metals, do you find this part of the world a good source of funds, a good source of investors, a good source of projects to potentially invest in?
Yeah, we're blessed at Wheaton in the sense that our portfolio has now gotten to the point where, and I don't think we need the funds. We're doing okay on that side. We're a good, strong operating portfolio that's delivering great cash flows to us. Our biggest challenge is putting that money back to work. On the broader base, over the last couple of years, we have invested into Africa for the first time. We've now got 3 projects within Africa, pretty comfortable in those jurisdictions. For us, we're a streaming company. We're not an operating company. So we're not looking to build new projects here. But if there's companies that want to build new projects here, we'd be happy to help. And that's not just specifically in Saudi Arabia, but this part of the world on a broader basis. We'd be happy to find ways to help. We do add a lot more than just the capital side. We have a measure of expertise that we've built over 20 years of experience that helps us identify, as I say, projects to invest into, but more importantly, projects not to invest into. And so we have a lot to offer from that perspective in terms of people that are trying to grow the industry and invest into that. We're hoping to find ways we can open up opportunities here.
Yesterday was the ministerial roundtable. I understand there are about 90 mining ministers from around the world here, the biggest conglomeration of mining ministers ever. So let's talk a little bit about country risk, political risk. That landscape seems to be changing very quickly. We have the tensions between the United States and China. Potentially that will increase with the ascension of Donald Trump as the 47th President of the United States next week. And we're also seeing increasing turbulence in parts of Africa. Many governments there want to increase the government take from the resource sector. What's your view on how the country risk, political risk landscape is changing?
Well, first off, I would say that it's not just restricted to Africa that we see governments wanting an increasing take of the revenues and increase their own share of of what's coming out of resource extraction around the world. It's not just Africa; it's a worldwide phenomenon. And what you've got is a lot of governments around the world that are spending a lot more money than what they're taking in it. So they're trying to find ways to source that extra capital. So it's not exclusive to Africa. It is a worldwide phenomenon. You have to be sensitive to that. At Wheaton, I think those kind of environments really are what makes it so important for us to properly structure our investments. When we're investing into riskier jurisdictions, I'm not saying risky, but riskier than normal, we have to make sure we have the proper protections in place. I've long been a believer that Wheaton is in the business of streaming precious metals we're not in the business of streaming political risk. We leave political risk with the operating entity, right? So it's a matter of making sure that first off, you've got an operating partner that has the capacity to maintain good, strong social license and proper, appropriate license and work with the local governments in that situation. But also making sure that you've got an environment where you can help them maintain, even within the local communities, a stronger social license, a stronger capacity. And so we make sure that we structure our agreements so that we have, say, parent guarantees in the event that something goes wrong. But on top of that, make sure that we have systems in place that provide support so that our partners are successful in those countries, help them be even more successful and more well accepted in those countries. And so the combination of that, to date, we've had very, very few issues in that front. And so it's a track record that has delivered so far. We hope it continues.
Well, I think one of the impressive things about Wheaton in particular is the fact you invest in ESG social programs alongside the partners that you fund. Let's talk about 2024. How was 2024 for Wheaton? How did the company grow? How did the company evolve?
2024 was a great year for us. We committed to just over $900 million in new projects. As I said, 2 of those projects were in Africa. The Montage Gold Koné project in Côte d'Ivoire, and then Kermak with Allied Gold in Ethiopia. 2 very promising projects and very, very well structured agreements that give us the appropriate protection, but also deliver good, solid, well-priced capital to our partners to help them build those operations, get them up and running. And so from that perspective, it was good. We haven't released our final production results of the year, but you can tell by the first 3 quarters and by all the other evidence out there, we had a decent year. We're going to finish in the upper end of guidance, the upper half of guidance, and that's the first step of growth. We're going to, we've got about 5 to 6 years of good, solid growth, 10 to 15% per year for the next 5 or 6 years as we climb this year from 2024, somewhere around 600,000 ounces gold equivalent to well over, ultimately now with the new projects, over 900,000 gold equivalent ounces per year by 2030, 2029, 2030. And so it's 2024 was sort of the first year where we're going to start adding, and we've got 4 new mines coming on stream in 2025. And so it was a great foundation year for us to be building off of. So really happy with the way things shaped up.
The interest rate environment is still relatively high. Is it a good environment for you to be sort of doing new deals and sourcing new deals?
It is. I wish we saw more copper projects out there. Just about everything we're looking at right now is helping fund gold miners build gold mines. And my preference, I think our business model works the best when we're buying non-core byproduct gold from copper mines or non-core byproduct silver from lead zinc mines. We just haven't seen that. The base metal space, there's no one committing that higher level of capital towards the new construction on that side. And so we're seeing a lot of interest on helping to build gold projects. I'm hoping with a stronger copper price, we have seen a bit of a forward move in copper here over the last couple of weeks. Let's build up a decent, solid foundation there. And hopefully we'll start seeing some positive investor decisions with respect to copper projects out there. See that go forward.
Well, the copper miners seem to be reticent to build new mines and therefore seek streams on new projects. Why do you think that is? Is it because the timescales of development are so extended, so their risk is extended, the cost obviously is getting higher, the capital intensity is getting higher?
Exactly.
Even BHP with the expansion of Escondida, that's potentially up to $10 billion of investment.
The base metal projects out there, especially the good substantive ones, the long life assets out there, the capital intensity is incredibly high. And not only that, because of the capital intensity, they need to have a good defined resource that's going to support that investment to 30, 40, 50 years out there, right? We're fortunate in the sense that most of our production already comes from assets like that. And that's one of the reasons why our reserve and resource base in a precious metal space is one of the longest life, if not the longest life, reserve and resource bases in precious metals, is because most of our reserves and resources come from the base metal sector, right? 60% of our production currently comes from copper mines. It's gold and silver, but it comes from copper mines. And so that capital intensity, it's a much bigger decision. And when we see copper prices, we all look forward and try and figure out where the copper is going to come from. I agree. 5-6 years, the demand, the increasing demand for electrification around this world and the need for copper, we don't see it coming on the supply side. So eventually that's got to somehow get balanced out in the price of copper. But we really haven't seen it. I was happy to see it start to pick up this year, but we're going to have to see a good solid foundation of $5 plus before I think we see any serious investments in the copper space.
Yeah, and it's still looking a bit uncertain as and when that copper will hit that $5 because it's been hovering around $4 a pound for, seemingly
Too long.
now. Yeah,
Too long.
Let's talk about the outlook for precious metals this year. 2024 was a pretty good year for gold, a good year for silver, although perhaps not as much. What are you looking forward to this year for 2025 for the gold and silver?
Well, at some point, silver is going to catch up and outperform, because it always does. But it is interesting, because this is a different gold bull market than what we've seen before. When have we seen gold strong with the US dollar strong? Very unusual market. And it really comes down to the fact that the bulk of the buying in gold that's driving prices right now is driven by central bank buying around the world. And that is central bankers getting concerned about having US dollar-based reserves and shifting that US dollar central bank reserve into gold reserves going forward. We see it around the world. It's not just China. In fact, Poland's been one of the biggest countries. Turkey itself, Singapore, India. We've seen it around the world. And that's not going away. And so, I do see that as being a good, strong foundation for an increased support for the price of gold. And that combined with, I do think that over time, that retail market is going to be able to pick up. We see signs of it. We had a couple of good months in 2024 from the retail side, the ETFs. Those are all good measures of how much retail interest there is in gold. And we are starting to see some of that wake up. And so there's no doubt I'm online as seeing that I do think we will see $3,000 gold this year. And I stand by that. I do think we will see gold at 3,000. What I'm more curious about is what silver is going to do. Silver, I can tell you, we're in the business of funding new mine construction. We hardly see anything on the silver side. And that supply shortage is ultimately and eventually going to have an impact on price. We just don't see. Most silver comes from lead zinc mines. Not a lot of lead zinc investment going on right now. We haven't seen that support that pricing. And so combined with increasing demand for silver on the industrial side, the high efficiency electronics, the antibacterial applications, all we need is a bit of a retail demand to wake up in silver. And I do think silver is primed to match gold, if not outperform gold.
As you say, silver does have a very interesting setup because of the supply side coming down and the demand side going up. So again, something's got to give there. Now, let's talk a bit more about silver, Wheaton, and your financials.
Wheaton Precious Metals.
Sorry, Wheaton Precious Metals. We've been talking about silver. Just already silver, right? You ended the September quarter with almost $700 million US in cash in your balance sheet. It looks like you can be adding quite a bit more to that when you report your full year and fourth quarter figures in the coming weeks. Now, you said you believe gold is going to go up to $3,000 per ounce. If you believe the precious metals prices are going to increase, why doesn't the company hold some precious metals on its balance sheet rather than all cash?
Because as soon as I do that, I'm forcing all of my shareholders to do that. Our business model is to deliver profitable precious metals production to our shareholders. Some of my shareholders may want to hold gold. They have plenty of options to do that. So as soon as I do that, I'm forcing all of them to do it. We keep our business model as simple as we can. We don't bring in byproducts. We have no oil and gas. We have no iron ore in our portfolio. Most expensive oil and gas and iron ore. We wouldn't bring that in. We keep our business model simple. Profitable precious metals production. And so we don't do any hedging. We don't hold. I'm passionate about where I think gold will go. But as soon as I start risking my shareholders' capital on that belief, that's turning a corner that we're not going to turn at Wheaton. Our business model is to deliver high margin, profitable precious metals production from good, solid, low cost assets from around the world. And we're not changing that model. We're going to keep it simple, nice and simple and easy. Our shareholders have the choice of holding gold. They can go and buy cheaper oil and gas or iron ore or base metal exposure elsewhere. And they don't need to worry about that. When they're investing into Wheaton, they're getting profitable precious metals production.
Fair enough. Let's follow up on that a little bit. I've been looking at some royalty companies in the oil and gas space recently, and one thing that seems to be very clear is they tend to be much more aggressive in their approach to returns to shareholders. Many of the royalty streaming companies in the oil and gas space have dividend yields of 4 to 8%. I think I'll be correct in saying in the precious metal space, you're looking at yield of 1, maybe 2% at best. Why are dividend yields comparatively so low in the mining space?
Well, I think the precious metal space has always traded at a bit of a premium to NAV compared to oil and gas. And that's hence my earlier comment about the why. Why would you ever invest in a company that has oil and gas in their precious metals portfolio when you can get such more attractive exposure in the oil and gas space? And so that's there's no doubt that those yields are going to be higher, but it's because their share price is lower. We've delivered more on the share side. Our yields right now are around 2%, and so we're comfortable with that. I mean, I think it's just the nature of the fact that precious metals typically trades at a premium to oil and gas. So I think that's where it really comes to play, is that you'll see a higher yield only because, though. I'm proud of our record at Wheaton in the sense that we give more of our value back to our shareholders than anyone else in the precious metal space. Well over $400 per ounce gets given back to our shareholders in our dividend every year. And so we're going to stick to that.
Okay, Randy, we're 2 weeks into 2025. What does 2025 hold for Wheaton's precious metals? Where would you like to end the year?
Well, we have 4 mines coming into production this year. So 4 new mines that are going to be contributing by the end of this year. Artemis at the Blackwater project, very close to turning on the switches, starting to produce there. It's going to be a significant producer for us. B2 Gold up at the Goose project moving forward. We have Mineral Park down in Arizona, privately held. And then, of course, Ivanhoe, the Platte Reef project coming in. So hopefully by the end of this year, we're gonna see some decent growth, probably 10 to 15% over what we've done in 2024. And again, it's going to be, I'm hoping that we're starting a 5-year, 6-year cycle where every quarter is going to be a record in terms of production. And with commodity prices, cash flows all the way through. So it's exciting times at Wheaton.
Excellent. Well, I wish you the best of luck with that. Randy Smallwood, thank you very much for joining us today.
Always a pleasure, Paul. Thank you.
Stay tuned for more from FMF from Kitco Metals. I'm Paul Harris, and this is Kitco Mining.
This is Kitco Mining's special coverage of the Future Minerals Forum.